Thank you, and I always appreciate being able to partner up with Hill Marks. You guys are a great company, great family business for many generations, and so it's great. So the Paycheck Protection Program. Well, I'm a commercial banker, and I've been working in the Capital District region at that, primarily coordinating business accounts, loans, deposits with commercial customers over a longer period of time than I'd like to admit to. And I knew nothing about the Paycheck Protection Program going back 2 or 3 weeks ago. And I have been involved in it very much so in the last couple of weeks. I've never, ever seen a program come together as quickly as this one has, particularly a government program. You know, it was passed on a Friday, and it went into implementation on a week later, where we were starting to take applications, and that was less than a week ago. So it's been very, very wild. Katie, why don't we get right into it, and we'll flip to the next slide. So what is the Paycheck Protection Program? You know, it comes out of the $2 trillion legislation that was passed a couple of weeks ago by Washington. Known, the slang on that is the CARES Act, and the payroll protection program aspect of it was meant to go to small businesses. U.S. Treasury is taking the lead on it. That's why you see comments on it from the Treasury, and they're implementing it through the United States Small Business Administration and their 7(a) guarantee program. So it is intended to allow businesses to borrow up to 250% of their average monthly payroll, and that is calculated, and as we've gotten guidance over almost every day on how that could be done, the application is a little bit gray. It says over the last 12 months or throughout 2019. Most companies are using 2019 because they have 12/31 year ends and they got good data, you know, to use on that. Either one of those is okay. But the program is really intended to keep people employed and to give small businesses the cash flow in order to be able to to do that in this time of difficulty. Katie, you can go to the next slide. Okay, the key to this thing is how the loan amounts are calculated, and that is by taking your average monthly payroll costs, which includes wages, retirement, group health insurance premiums, and aggregating all of that over that 12-month period, and then basically dividing it to get a average monthly payroll cost amount. And that number is multiplied times 2.5 to get to the maximum loan amount for your business. That's the 250% of your average monthly payroll costs. The maximum loan that can be made here is $10 million. There are no fees to companies to apply for this, and you know, the term here that's listed on here, Katie, I apologize. That was the first guidance that was given on the loan program. After it came out, it has been changed to 2 years. So each of the loans will have a 2-year maturity, and the first 6 months of payments will be entirely deferred, and then it'll amortize over the next year and a half. The idea, though, is that the loans will be forgiven because a portion of the loan or all of the loan will be forgiven based on the way that the loan funds are being spent. The intention was that most of it would be spent on payroll costs, the same way that it was calculated for the loan amount, which would include, you know, if I didn't mention before, also state and local taxes, that are withheld, that the business would pay for, as well as the wages, retirement benefits, insurance costs. So all of that is going to have to be tracked after the loan is funded to be able to get the loan forgiveness. Some of those rules are still being written. We haven't gotten great guidance on that of what we're going to need to get, but you could, if you do take one of these loans, you are going to need to keep good track of your expenditures on your payroll costs over the 8 weeks that start after the funds are distributed to you. There's no collateral involved and there's no personal guarantees. You can flip to the next slide, Katie. Okay, so this is telling you what you can use for the loan. Salaries, wages, payroll, benefits, etc. And you also can use the loan funds for rent, utilities, or interest on any mortgages that you may have. However, it is being capped at the amount that can go to non-payroll costs is being capped at 75% of the loan funds. So the rent, utilities, interest on mortgages and other loans, that is capped at 25% of the funds that you receive. If a company has sought directly through the SBA their economic injury disaster loan, that can also be rolled into this at the time it's closed. Katie, you can go to the next slide. So the big question is, how do I qualify? Well, this was intended for small businesses, roughly defined of the world of the US SBA and their definitions of a small business concern, but which is roughly having less than 500 employees. There are some exceptions, but they can be researched on the SBA website as far as the type under the industry code. There are some that are a little bit larger, but for the most part, it's less than 500. Company has to have been in operation on February 15th of 2020, and you must have employees who are being paid salaries, payroll taxes, in those forms. And not-for-profits and for-profits are all eligible. We certainly have received plenty of our clients who are not-for-profits filing for relief under these conditions. So, in addition, starting on Friday, sole proprietorships, independent contractors, and other self-employed individuals can also apply to this. I'm sure there will be some more guidance that comes out on how they calculate their loan amount. You can go to the next slide, Katie. Okay. As far as how to apply and what you need to gather, the banks are really doing a fast-track review of the information that you give them. What's showing up here on the screen is just a checklist that Capital Bank had put together to try to give some guidance to companies. I think it's similar to what other banks around the state and around the country are doing. We've been advised to collect the 941 and the 940s that have been filed for the quarters for the 12 months prior that you're using to calculate the average monthly payroll costs. Copies of those payroll records and all the data, the background data that would be involved in that, retirement benefits that were paid, health insurance benefits that were paid. So that data is incumbent upon the banks to have gathered. However, we're really not spending an awful lot of time trying to figure out how you came up with the number. We're required to ask you the burden or of the credibility of the information, the accuracy of the information is that burden is on the business submitting it to the bank. What we have been asking companies is to give us a worksheet or spreadsheet to pull it all together and help us understand exactly how you came up with the average monthly payroll costs. That's what we need to verify, and in order to move the application onto the SBA. And so, as you can see, for that, what documentation is needed, it's awesome. It's very difficult to try to get your arms around all of it, and that's why most of the banks are asking for a recap summary sheet to help us see exactly how you came to that number. That's the number we're verifying. That's the number you'll be certifying to, and that's how we can move the application along. Next slide, please. Attached here is the Paycheck Protection Program application. It's really very, very simple. It's only a couple of pages with some instructions. A lot of it is check off the boxes. You can go through, through those are mostly yes or no's. There's places for you to initial, and I can't quite read it, but I think it's questions 5 and 6. And it needs to be executed and signed. The banks can accept electronically signed applications. Most of the banks have that application out on some portion of their web page. You can also pull that from the U.S. Small Business Administration's website, or the U.S. Treasury website also has this information, I believe. So it's very simple. When it comes into us, we go through it to make sure you haven't checked 2 different types of boxes at the top to what kind of a company you are. That from what we know of the company, does the number of employees make sense? And by the way, the guidance on that is full-time equivalents. And I would caution you to be careful about that, because I think that's going to be accurate with that, because I think it'll come into play when it gets to the loan forgiveness aspect of this, because the program is really meant to keep people employed. Okay, I think we can go to the next slide. Okay, what we have here is there's some, I believe that at least until yesterday, the most current, frequently asked questions on the programs that was released by the Treasury and the SBA is attached. There's an overview, which is also available on both the SBA and the Treasury websites to the program. It gets into a little bit more detail to what I don't have for my time allows here this morning. There's also another copy of the application itself, and the checklist of information that is going to be required for you to send to the lender in order to be able to have the backup that we're being asked to have in place. Next slide. Okay, the one thing I did want to go over is, as far as applying, I think most banks are involved. And one of the aspects that SBA is requiring of the banks is that we need to adhere to the Bank Secrecy Act, better known as the Patriot Act requirements. That comes to the banks in the form of knowing your customer and being able to obtain documentation to be able to prove that. So my recommendation to you is there's been a little bit of a toilet paper syndrome to this. People are afraid that the allocation will run out. Congress has allocated $349 billion for this program, which is a big number, but it still has created a little bit of a rush, to the banks, a rush that I would say, in my 40 years of banking, I felt like I was on a beach with a tsunami wave coming at us on Friday, scrambling to try to understand the program. And each bank only has so much money they can lend, and each bank is going through their process to allocate a number for this program. So there's an allocation from Congress as far as how much they'll guarantee of these loans, and the banks are doing it on a quick fast track basis, because the loans are 100% guaranteed. There's no collateral, there's no personal guarantees. So the expectation is that if the loans aren't forgiven, that they'll be put back to the government and will be made whole. But the whole business about this Bank Secrecy Act is I would recommend you go to a bank that you have a relationship with, because they've already done that. They've already done some of that vetting. They have that documentation, for you, and the process will go much quicker for you. And I will tell you that this is the case at Capital Bank. We are trying to take care of our own customers on a priority basis to make sure we don't run out of money to take care of those. Katie, how are we doing for time? I think I've on a overview from 30,000 feet, I've covered what I think is important about the program. Do you want to open it up?
Yeah, so we're doing pretty good on time. We have about 10 minutes left till 1:30. So if anyone has any questions, Kevin will do his best to answer them. There's a lot of gray areas with this topic, but he'll do his best to answer. So if any of you have questions, please write in the chat or unmute yourself and ask a question. He'll be happy to do his best to answer. Okay, does Capital Bank still have capacity to take on new loans?
They do, although as of yesterday afternoon, I think we were pretty close to $100 million in this. So unless our board allocates more, we'll probably be ending our part of it sometime next week.
Any other questions? Okay, if someone wanted to start this program, where should folks turn? What banks if you guys shut down?
Well, I think the rules are different at every bank. I'm pretty sure that every bank has got information on how to apply on their web pages to get to that. We're hearing bits and pieces as we try to understand how the market is handling this, but I think it was a little rocky getting started on Friday of last week. Processes have been created at each bank, and each bank is going to be a little bit different how they're doing it. But that would be a great way to start. Would be like through at Capital Bank, we're having everything being submitted electronically, to us. When we're no longer able to take applications, we'll let companies know that as they come in, or they could reach out to the bank or bankers and just get a verbal status on it. The ability to get to some of the bankers has been a little bit difficult, at least earlier this week, as we've been trying to create the processes around this thing and to begin the processing of these loans. Unfortunately, there's a lot of back and forth with companies regarding, did you get the right information? Do you need more? Did you really mean to say this? Do you really mean to that you got these many employees? Did you realize that that's full-time employee, a full-time equivalent, et cetera, the way it works.
Okay. Another question would be, can a seasonal business such as an ice cream stand qualify?
Actually, they can. The rules of calculating the average monthly costs are a little bit different, and there's a different time frame in that. If you grab some of the frequently asked questions or the application or the overview, some of those are defined. I really haven't had to deal with that myself, so I'm not as familiar with those rules, but I believe you can. But I think part of the thing is you might have had to have been in business on February 15th, but I think that needs to be checked. I can I can research that and let Katie know, and maybe she can get back to the person asking that question as far as details on that.
Yeah, absolutely. I will. You can research, and we can forward that question to the asker. So also, Jason wants to know, if you've shut down your restaurant or business, can you still get funding?
That's the difficult issue right now, and I think that as many companies and are grappling with that. I mean, there was an article in the Business Review today from Tom Hoffman, who runs the Jiffy car washes, Jiffy oil changes and the Hoffman car washes, being that since the clock starts ticking and your forgiveness number starts for after you've been funded for 8 weeks, what if you're in a situation where you're in a state like New York where you're considered a non-essential business and you've been closed down or you've laid off people, you actually can't go back to work. So that's a difficult issue right now for people are grappling with. Because that 8-week period starts after the funding of the loan, and the banks are required to fund the loan within 10 days after receiving the SBA allocation on that. So that is a very gray area, and I would suggest at this point that in the worst case scenario, if the restaurant had applied for that, they would, and they don't have employees that they can offset, that the rest of the funds they're probably going to have to just keep on the side to repay the loan, because it won't, at least where the rules are written right now, they won't be forgiven for not being able to use to pay payroll costs. I think they would be able to get forgiven for things like the utilities and the rent and the mortgage interest, but it's based on calculating what your previous 12 months average monthly payroll costs were. I think the rule Congress vision down.
Hold on 1 second. Sorry about that.
So as Katie had mentioned, gray areas, I think that one is a difficulty that a number of small businesses are dealing with. They don't want to lose out on getting the allocation, yet they don't have all their employees back. And to Tom Hoffman's point in the article this morning, which I encourage you to take a look at, he's got a lot of employees on unemployment that are getting paid more than what he was paying them when they were employed, which he envisions that once he can get reopened, might be an issue for getting them all back.
Okay, a couple more questions, and then we can, it'll probably be around 10:30, so we'll probably have to end at that point. But a couple more questions. If you laid off folks before being aware of the rules of the loan, can you get that loan waived if you bring employees back? Or
I think the answer to that is yes, because what you're doing is you're calculating the loan amount on the last 12 months or 2019's average payroll costs. If you've laid off people and you apply for the loan, and it's based on, and the loan amount is basically 250% of your average monthly costs from that prior period, you've laid off people. I mean, the purpose of the whole act was to get people back employed. So you can definitely bring them back on the payroll, and anything you pay them in payroll costs is definitely going to be able to be used towards the forgiveness piece.
That's great. Okay, another one is, how does a sole proprietor calculate their monthly payroll?
The guidance on that has not been coming out to us at this point. That window doesn't open until Friday, I believe, the 10th, tomorrow. So stay tuned on that. I would encourage you to look at the Treasury webpage for their frequently asked questions. They add to them every single day, and I would guess that we're all going to be grappling with that starting tomorrow.
All right. Well, Kevin, I just want to say thank you so much for doing this for our customers and our team today. We're very appreciative. You had a lot of insight and expertise. So again, thank you for helping us out today and communicating this program to our customers and teams.
I have one more point I would make, and
Okay.
company CPAs, all the CPA firms have been very, very much involved in this, and they are a great resource to go to. They're dealing with a lot of banks, so and they're helping companies with the documentation they need and how to calculate the average monthly cost. And in some cases, some of the payroll companies have been producing, ADP I've seen, and some of the others that have been producing a report for companies that allows them just to pluck one number off of it, provide it to the bank, and use that to calculate their average monthly costs. So I would encourage you to also use those resources if you have not yet got involved in the program. Thank you, Katie.
Hey, Kev, this is
Thank
Ray.
you so much. We know. Oh,
I just
go ahead, Ray.
I just wanted to say thank you for everything you've helped me with and helped me navigate through this. We put our application in last Friday, and you were very instrumental in getting that done. I appreciate the daily updates you were providing as the rules kind of were being developed. I believe this program, you know, I know there's other things that are out there that the SBA has put forth, other options potentially, but I mean, to me, this seemed like the most beneficial for a lot of our customers, and that's why I wanted to get this done today, so our customers could learn about it, our sales reps, our sales managers could get the word out to our customer base, because I think it does have the potential of being very, very helpful. So I know go ahead.
If you have companies employed, absolutely. If you've still got them on, or you can bring them back and you've got work to do, this is perfect.
Yeah. So I'm glad we got this done today. I really appreciate it. Just like Katie said. And if anybody, I guess, has any other additional questions that they reach out to us about, I mean, I'll try to get them over to you. I'll do my best to answer them, but you know, Kevin, I'll lean on you as well. I really appreciate it, bud.
Great.
Thank you so much, Kevin. Have a great day, and I know it's a busy time for you, so we'll let you get back to it. Thanks again so much. We really appreciate it.
You're welcome.